Well, good evening, everybody. It is Thursday. It's time for the Stock Talk that we do every Thursday at this time right here on Facebook, on YouTube. My name is Blair Nightingale. We're looking at Stock Talk hot or not. Last week, we had a big one. Okay, we looked at GameStop. Okay, we looked at something that everybody is talking about. And the reason everybody was talking about it and the things that I thought that you should know about what is this thing we're hearing about everywhere? Is there an opportunity there for me? What are some of the risks that I should be aware of? And that's what we went over. If you didn't see that, you can always go back. Our entire catalog is found right there on the Facebook page and the YouTube page. So you can go back and you can watch those. As always, just diving in here, I want to make sure to let you know, if you are joining us live, I know some people will be joining us on the recording, but if you're joining us live, make sure to put a comment here. It's right here for me. I don't know where it is for you, but go ahead, drop a comment, say hello, let me know you're here, let me know where you're from, and ask any questions. We had fantastic questions last week that helped us dive a little bit deeper into what was going on. And of course, if you saw last week, we understand there's this new kind of strange thing in the investing world, and it's called Wall Street Bets. Now, I mentioned last time it's from something, a website called Reddit, and we would call a subreddit any topic that somebody or maybe some people, sometimes it's more than one person, have started on this website, Reddit, which is a place for people to come together and talk about specific topics. Well, of course, this Wall Street Bets is about just that. It's a group of people that have come together and said, hey, we're going to make some bets on Wall Street. Well, of course, the story we went over last week was specifically GameStop. There were some other stocks that were also a part of that group. We're going to look at those stocks today because I think this is, you could almost call this part two. We were looking at Stock Talk Thursday. Our title for today is Silver, and we are going to get to silver. But really, you could look at this and almost call it part two, because what I wanted you to understand last week, what I hoped to communicate to you, was that there is a lot of activity here, but what are the risks? What are the risks? And this week, I think we're going to take a look at pretty conclusively why it's so important that we understand what those risks are. I see some questions dropping in there. I'm going to jump to those in just a second. And of course, we are going to get to this. What is the latest with this whole Wall Street Bets thing? We're going to talk about that because they've had their eyes on silver. It might not quite be what you think. And then this whole topic, this whole idea of a group of, what I've said many times, you and I, retail traders, that's you and I, coming together and going after a stock on Wall Street. It's created a lot of buzz, some market volatility. What do I need to know about the whole thing? Maybe not just specifically a stock or a commodity like we're going to look at silver today, but what are some of the things around this whole item that I think still present risks? Now, there's opportunities here. I said that last week. I'm not going to say there aren't opportunities. This isn't necessarily how we trade at Tradeway, how we teach our people to do this, because we have a very specific methodology and system for getting in and out of stocks, identifying opportunities and identifying misfires, places that may have opportunity but have such incredibly high levels of risk that they may not be as good of opportunities as we think unless we know how to manage the risk there, okay? So Benjamin said, should I invest in GameStop, with a little wink face there? Because, of course, you know, jumping into GameStop now, as we're going to see in just a sec, I'm actually going to pull that up for us right now. We're going to look at a number of stocks. So give me 1 second here. I'm going to bring this screen up for you so I can share it with you guys. Another strong day in the market today, everybody. Nice move up. All right. Share this with you guys. And then I'm going to jump on back, look at some of the comments here. Benjamin, of course, good to have you, my friend. Susan, Jeff, Robert. We got some questions in here. Tom says, nice live trading today. Thank you. Yeah, here at Tradeway, we do a live broadcast for the last hour of the trading day for our students so that you can interact with us live on there as well. Jeff is asking, valid question, are we likely to see more market volatility and uncertainty? Well, specifically pertaining to this Wall Street bets phenomena, likely. I'm going to talk about some things today that may mean not as likely as it has felt. But here's a basic rule for anybody that wants to do investing or trading to adopt into their mindset. Sooner the better. Anything can happen. Okay? Trading isn't about knowing what's going to happen. It's about managing risk with what is happening. Note takers, you can jot that one down. Trading isn't about knowing what's going to happen. It's about managing risk with what is happening. Okay? So, that said, there's that phrase that I just used, anything can happen. And that's true. As traders, we can never afford to forget that anything can happen. So that's some level I can understand, Jeff, maybe not a satisfying question, or excuse me, a satisfying answer when you say, are we likely to see it? Well, we certainly can. I do think there's a little bit of a damper on some of it right now, but we could easily see that. And I think we shouldn't expect, if this is maybe the most direct answer I have for you, I don't think we should expect this to just go away. This isn't just going to go away. People, listen, even me personally, people know that I trade and I know how to trade, and I help other people know how to trade as well. I'm getting texts. People are coming out of the woodwork. Calls. Hey, we got to talk. Hey, we got to text. Hey, let's get on a Zoom call. Hey, everybody wants to learn how to trade because they feel like they're standing on the sidelines watching the market explode. And of course, that's not the same way everybody feels, but a lot of people are feeling that way. Why do I say that right now, Jeff? Because I think it's been such a bigger news item. It's raised awareness of the markets that I think there's opportunities for me as a retail trader that I didn't know there was. Because look at these guys. They're doing it. And that's what we need to see. We need to see people doing it to get turned on to that. And I think we're seeing a lot of people ask questions based on that. So I think the possibility that we continue to see something like this happen, but we'll come back around to that because I think I've got some more comments when we specifically talk about where's this Wall Street bets thing right now that I think will be applicable to that as well. Robert, I see you there. Q&A this afternoon. Yeah, my pleasure. Awesome. Okay, so let's take a look here. Okay, I've got my little bets watch list on the right here. So let's take a look at this. First of all, this is good to see. We're seeing such massive moves in these stocks. It might be easy for people who don't pay attention to the market very much to think that 10, 20, 30, 40, 50, 100. I saw a stock today that moved 1,000%. It was over 1,000% in one day. That means if you'd bought that stock in the morning and you'd sold it at or near the high of the day, you'd made 1,000% increase on those shares. So those are huge numbers. And I say that because they are happening. They're happening in the market. However, those aren't normal. Those aren't common. Those aren't typical, okay, to see those kinds of movements in stocks. So what do we see over here? Change percentage. If you look at that on the right side of my screen, here's just 4. Okay, now there were more of these stocks last week that came out of this Wall Street bets, but here's some of the biggest ones, and I think this will help us just looking over these 4 today. Today, this lost 20% of its value, okay? BlackBerry held strong here. It had been dropping. It's flat at about a percent and a quarter. GameStop lost 42% of its value to just today, okay? And then we've got 26.5% here for cost. So it is definitely Huge numbers on the downside. Let's go ahead and take a look. Now, what I want you to see is I said last week, all right? That's a week ago. So what do we got here? We got Thursday, Wednesday, Tuesday, Monday, Friday, and then Thursday. Okay, so here's when we were together last week. Thursday, the day before had gone bananas, as I like to say. And then even this day, pretty wild swings. Look at how low. It goes to 650 up to 1650. Okay, that's an incredibly wild swing. If you don't know when to get in and when to get out, you don't have a specific way or confidence to manage risk in a trade, in an investment, and I've explained the two are different, then you could easily get caught in the wrong spot. The next day it zooms up, you might still be interested. That was Friday. It goes up again, gaps in the morning. You know when most retail traders place their trades? In the morning before they go to work. Now, I'm sure the data on that is changing with as many people as we have getting in on Robinhood and all that kind of stuff. But historically speaking, that's typically when it happens. And for that reason, the first hour of the trading day has been named amateur hour. Okay, amateur hour, the first hour of the trading day. So what if you bought the stock right at the beginning? The rest of the day, you just watched it fall. And it's not even close now. It's lost 65% of its overall value from this open price right there at 2029 approximately. 65%. I read something today. Somebody went out and put $35,000 of their money in GameStop. Okay. Now, some people could and did win big on that. But how many people out there are we not going to hear about because they put that kind of money into a stock? Now, I understand when I say that kind of money, that's relative. That's relative for folks, right? But for most folks, to go out and put $35,000 into a highly speculative, highly volatile position like GameStop over the last 10 days is a significant financial risk. Okay? So we get caught up, we can, in this mania of these stocks, and now you're down 65%. Nobody wants to be down 65% on 35 grand. Now, keep in mind, of course, I'm calculating from the high. Okay. I'm calculating from the high. BlackBerry, we said it was flat today, and it is, but it's down 58% from the high. Okay. If you'd bought BlackBerry on this day, looked real good. And that's a day where a lot of people got in. Remember, this candlestick here, it opens at the bottom because it's green and it closes at the top. That's what a green candlestick does. Open prices on the bottom, closing prices on the top. So it closed at approximately $25, but where did it open the next day? Down here. It opened at $19.50. So it took a significant jump overnight. You wouldn't have been able to even get out of that position until after it had gapped down. And it gapped down pretty significantly and has fallen from there, okay? So that means 58% of the value is now gone out of that. Now let's look at, of course, this is the poster boy, right? If you will, of the whole thing. 90%, 89 as I have here on the chart, from the high, okay? 90% from this level comes down, just an unbelievably volatile day. Up, down, 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 down. That's a lot of red. There's a lot of red on that chart. 90%. You say, well, Blair, I know so-and-so made, yeah, sure. I know there's people out there. This isn't me being negative about what's happened here. Again, like I said last week, I want you to be able to understand the risk. And 90% down is a very volatile stock, okay? That's in 1, 2, 3, 4, 5 days. Okay, 90% in 5 days. There are some people out there online that are saying, you know what? We are trying to be defiant, and we're going to hold on to the stock as long as we have to. Well, that may feel noble to some of them, depending on their crusade, but really for me, it comes down to dollars and cents. It comes down to dollars and cents. And we always like to say at Tradeway, the market is like the gorilla. Okay, it's the big money. And we're going to dance with this gorilla, but when we do, we're going to let the gorilla lead. Because what happens when you try to dance with a gorilla and you try to lead? Okay, it's not so good. It's not so good. And I think that's what's happened here. So that's something we need to understand. Let's look at one more. 85% of its value. 85% of its value is gone. Okay, so the list goes on. All of those stocks have dropped significantly. Here's what I want to say. I talked about this last week. Shares on the open market, stock market, okay? Shares rise and fall based on supply and demand. But there is somewhat of a fundamental tie between share price and company value, okay? Can shares trade at a higher level than the company at which those shares came from? Can they trade at a higher level than the value of that company? Yes, they can. They can also trade at a lower value, right? If you broke up the company and all its assets, its actual value into equal shares that is available on the market, what would each share be worth? That's a direct value to the company. We call it the price to book ratio. Okay, that's to give us an idea of what the shares would be worth in comparison to the company. And there are lots of ratios like that involved in what we call fundamental analysis. Okay, we're looking at the fundamentals of the company. Hey, what's this company actually worth? So let me go back to GameStop. And I mentioned this last week. When the price of shares of a stock gets so unbelievably far from what the actual value of the company is, there's a tremendous amount of downside risk because there has to be a reason to hold that price at that level. And in GameStop's case, in fact, in a case of all these stocks that we've been looking at, there is no reason to hold it at that level. It's pure mania. It's speculation. So we have to understand that that is part of the risk of what can happen there. And certainly that's what we saw happen with these stocks. Just change my screen here. There we go. So we also have to look at something else that happened last week. Let me do this. I've got two screens open at once. A lot of people used this to use Robinhood. Now, I want to say a couple things about Robinhood because we've got a lot of people that are interested in jumping on some of these iOS, iPhone, Android brokerage platforms. I have no issue with these. Tradeway, we don't have any issue with these. We do use Tastyworks. That is our recommended brokerage. We know them. We use them. And for that reason, we trust them. And so that is something that we recommend to our students. Now, one of the reasons I think that's important is I always say you got to look at fees. You got to look at platform. You got to look at customer service. And specifically, when we're talking about some of these online free brokerage apps, and not just online, but on your iPhone, whatever device you use, these new apps, they might be free, but a couple things about Robinhood. Number one, there are arbitration clauses that you have to sign when you sign up with Robinhood. And what that basically means is they have something that says, hey, you're going to sign up and open a brokerage account with us, but guess what? If you do, and we ever get into a dispute, you basically have to agree that we have a major advantage in that dispute, okay? You don't have the same rights and privileges that you would normally have. You're going to waive those over to us, and that's part of the user agreement. That's one thing. There are multiple, I was going to say 13. I'm not sure how many there are as of today, lawsuits against Robinhood for what happened during this whole fiasco when they limited people from being able to buy GameStop. So, and some other securities as well, not just GameStop. So you have to understand there are some special things there. What's the next thing? I said customer service. You're not going to get somebody on the other end of the phone. I want to say this to everybody today, okay? When you are looking to be a trader and investor, you need to have a broker. You need somebody who's the go-between you and the exchange, who's going to fill orders of stock that you would like to buy and sell. Now, when I do that, I want to know that I can pick up the phone and I can get an order desk, somebody who works at that exchange, and not the exchange, at the broker on the other end of the phone, so that if I have any issues or problems, if I have any questions, I can do that. And I've done that. I've done that with Tastyworks. I called them. I've had an issue with the platform once. I had a question about accounts, etc. Get somebody on the phone, able to take care of that. I have some recourse. Their fees are extremely competitive. So I'm willing to pay a tiny amount to get a lot instead of using a free app and getting no customer service, or something where maybe I can send in a help ticket and wonder if it's ever going to be answered. Robinhood went from something like 3 million to 13 million users just last year. So I don't know how they're keeping up with that. Something to keep in mind, the risk isn't always right here in the market. The risk is also on the platform you choose to use. So I think that's something we really need to highlight moving forward as well. Now, I mentioned we're going to look, where are we really going from here? What was the next target? Well, let's take a look here, because they'd come out and said, hey, we're going to do something similar. We're going to go after, let's do this one here, silver. And that was back in here, okay? We saw the price of silver. Now, David Mitchell, founder, CEO of Tradeway, one of his sons is part of Tradeway, of course, but our precious metals division. Okay, we have a whole division at Tradeway that's focused specifically on precious metals. If you head on over to tradeway.com, you'll be able to find a tab there that says precious metals, and you can learn all about that program. Ben is our go-to guy. He showed me this just the other day. Hey, Blair, you got to look at this Wall Street bets thing. The next thing they're really going after here is silver, and they've inflated the price of silver significantly. Now, we saw some pretty big jumps here, and the thing about these moves is that they happen quite quickly. And since then, it's cooled off once again. I'm not seeing even close to the same buzz, and certainly not the same degree of buying on this that we saw with GameStop. This is something that when I backed it out just a little bit earlier here, as I was preparing for our broadcast today, really, it's still for the most part within this pattern. Okay, that's what I'm always looking for, and we've gone over that many times on this channel. Of course, we're looking for patterns. So really what this did is it came down, it hit support, it moved up. Yeah, it got a little bit higher, but it's already selling off. Okay, so nothing too crazy going on with what I see on silver. We did see some silver ETFs, and you see the jump here, pretty significant jump, higher than it's been. And then it cooled off pretty fast. So look at this again. Listen, if what we're going to do, and this is my point today, okay, if what we're going to do is get caught up, and I don't mean that so negatively, but I think it's worth saying, if we're going to get caught up in, hey, what's the next Wall Street bets thing? What's the next online thing, meaning they're talking about it in an online forum that says, this is what we're going to go buy. This is what we're going to go buy. And then we do that, we run the risk. We run the risk of going, boom, this guy gaps up to where? It gapped up to 27.75 respectively. And it has fallen almost ever since. Okay, so that is the danger of it, right? This speculation. Now, I want to say something else. In fact, I want to read this quote because I want to make sure I get this right. However, I read this article earlier today. However, according to reports on CNBC this morning, I believe this article was a day old, it is unclear whether or not the thread came from genuine longtime Reddit's Wall Street Bets traders. Okay, so remember I said there's that Reddit website. They have the subreddit Wall Street Bets. They're actually not even sure whether or not the whole silver thread came from one of their traders on Wall Street Bets, or whether it was large professional traders posting on the forum hoping to drive the price of silver higher. So why is that important? Well, because if a lot of people don't get on board, if it's not truly something that is going to catch on, and it's not coming from some of the moderators on this thread that have influence, well, then we're not going to see the same results. In fact, there's some speculation that perhaps we're seeing professional traders, which is ironic to me because ultimately it sounded like this was the Robin Hood effect, right? We're going to go after those big wigs on Wall Street and hit them where it hurts. Well, now Wall Street is potentially, I don't know, but as this source is saying, potentially they're just saying, well, why don't we get in on the action? And so there are risks to this whole thing that I think, again, you want to make sure you have a clear method of what you're doing because it's becoming a little bit more muddy, a little bit unclear as to what exactly is going on. Lastly, I would say these Wall Street bets moderators are actually now beginning to fight. And I'm not going to give time to really go over this that much as investors and traders. This isn't really what's most important to us, but they are beginning to battle over control. They're starting to fight over control of this absolutely massive online forum. You can imagine how many people joined it after hearing all of this GameStop news. So who knows what the future of that is? For you and me, we can go out and say, you know what? I'm going to have a clear plan. I'm going to learn how to trade. I'm going to look at what's the criteria I need to see to get into something. What do I need to get out? I can have a specific defined way of getting in and out of something where I limit my risk. I know what my risk in every position is. I know how to get out. I know how to look at maximizing profits while managing downside risk. And that's what it is. As I said earlier, this isn't about knowing what's going to happen. This is about managing the risk in the trade. So Wall Street bets, hey, we saw a lot of wild action. Jeff's question, are we going to continue to see that? We certainly can. Things a little bit quieter. And lastly, I would just say a little bit quieter right now for sure. There is a hearing even coming up about GameStop, these other stocks in Congress. Okay, this will be on February 18th. So we have to understand something else. And it's really what our talk is about today. I know that we want to look at silver. We want to look at GameStop. We want to look at these things. There's going to continue to be hot stocks that come and then they're hot and then they're not, which is what we're talking about today. They're really not, right? Are they hot? Are they not? Last week they were hot, but they're so quickly just not, okay? And remember, I said there's a difference, trading and investing. Now, some have come into this with an investment mindset, which is a long-term mindset. It's a long-term buy and hold. Investing in what? In the company, in the growth of the company. If the stock price is at $480, which I said last week, I believe was something like 47 times or 67 times the value of the company, that's not investing. You'd have to see GameStop grow to actually match that share price. Okay, so if we're investing, we're getting hurt. Okay, we're getting hurt. So we definitely don't want to do that. If we're trading, then we're a little bit more nimble. We can do that. And that's something that we really want to pay attention to doing. But keep in mind the risks here. There's market risk. There's also regulatory risk. And I'm going to finish with this. We've got a hearing on the 18th. Who knows what they're going to say? Who knows what they're going to change? So we want to keep that in mind when we're looking at some of these things as well. Listen, don't go out and bet the farm on these stocks, okay? Because I'll tell you what is definitely not hot. Taking too much risk is never hot for a trader. I don't care what the stock is doing. Now, the market itself, the market's hot, right? There are good opportunities out there, y'all. I'm going to tell you that right now. I'm going to pull up the S&P for us to finish out here today. Let me go to this list here. Yeah. Market dropped, pivoted at what we call the 50-day moving average, and now we're looking good. All-time highs today, back in the pattern, back in the range. So that's looking hot to me. Silver, not so much, not today. GameStop, Wall Street bets, not so much, not today. Jeffrey says, Blair, your lighting is much better this week. Well, thank you for that, Jeffrey. We're actually going to have some changes here in the studio next week for sure. We're just getting it all set up, so we'll continue to see some things change there for you guys. But I appreciate you being on here, everybody. If you have any other questions, you can pop it in there. Last thing I want to throw out. You're coming on, you're getting this information. I get to see you guys. You get to see me every Monday, Thursday. We're doing other programs on this channel as well. So if you're with us on Facebook, make sure you like the Facebook page. It will notify you when we have broadcasts like this. If you're on YouTube, go ahead, ring the bell right there. It's going to subscribe you, and you will be able to see on that platform anytime we are releasing new content. And that said, once we jump off of here just now, I'm going to post a link there for you guys at Facebook and on YouTube. If you're watching this by the recording in time, you'll be able to see our founder and CEO, David Mitchell. He's going to teach one of his favorite courses, the Echo Principle. You don't want to miss this. Dave has never taught this live. We've always had a recorded version of this. He's never taught this live. So this is going to be a free teaching from David Mitchell. You can come on. You can join him live. I'll pop the link in there. Don't miss that. If you've never heard David teach, you don't want to miss this. If you've heard David teach, then you know you don't want to miss this. So I will pop that in there. That is the Echo Principle free teaching. We've got that coming up on February 9th. Okay, February 9th, and I'll put the registration in the comment box. Thank you guys for being on here today. Stock Talk Silver, not so hot. Not so hot. But the market's hot, and I said it the other day. New opportunities are always coming. So let's keep joining each other right here on this channel for this show, Stock Talk Hot or Not, and we'll continue to look at stocks so that you know what's hot, what's not, what to do, what not to do, and how to do it. And we'll see you guys next time. Thanks so much.